In this episode, my friend Bill Herron and I discuss his experience over the last 10 years with the infinite banking concept. We had fun. Hope you enjoy listening. Thank you. Welcome to the Banking with Life podcast. I'm your host, James Neathery, and today I'm as excited as I can be. It's my pleasure to have my friend on here, Bill Herron. And Bill, we've known each other. Here's a little bit of background. We've known each other since I think earlier this year, April or May. And he's been kind enough, right, to take the time out of his busy schedule and spend some time with us and kind of, just have a conversation about how he was exposed to this idea of the becoming your own banker, get the background, and actually, he's practiced this for 10 years. So he's going to share with us kind of his experience and his thoughts, and I know we're going to have fun. I've been looking forward to this interview, so I'm excited. Bill, thank you so much for coming on with us.
Yes, thank you.
And now listen, this is November 4th, right? And can I say where you live?
Yes, that's fine.
So he lives in Pennsylvania, and so now Pennsylvania is going to have us all in their grips for the next couple of weeks.
Exactly. Yeah, I think I voted the right way there.
I hope you did. So, okay, Bill. So look, you have practiced the infinite banking concept, or was exposed to it and participated. Got your first policy about 10 years ago.
Yes.
And so we can either start there or even prior to that. How did you even become exposed to this idea?
Well, yeah, that's where I would like to start. Like go back right from how I was introduced to it. A friend of mine, I'm an accountant, so I'm into personal finance. I used to read all the books. Susie Ortman, Dave Ramsey, I read them all. Rich Dad, Poor Dad.
So there's hope for accountants, right?
Yes, and I was really into personal finance and just learning and absorbing as much as I could. Mm-hmm. So it was about I bought the first policy 10 years ago, so it was 2010. So I would say it was around 2004. A friend of mine, he's an architect, and he came to me. He knew I was into finance, and he gave me Nelson's book. Mm. So he said, "Read this and tell me what you think." And I read it, and I put it aside, and I said, "I can't afford this. I'm in the 401k. We homeschool and one single income family. So." I put it aside and said, nah, this isn't for me. And then in 2008, 2009, the market collapse happened. The house on the market, and the market collapsed, and I didn't see my 401k doing too well. And I had everything in my 401k, my entire savings. And on the outside, I'm doing business with the banks, loans, and I felt like I wasn't getting anywhere. So I took a look at the book again, and then started really deep diving. Another thing that opened my eyes is Ron Paul running and the Fed, and I started learning about fractional reserve banking and how the banking system works. So really opened my eyes. So I started looking, and then came across Nelson Nash's website, infinitebanking.org, and found a practicing practitioner and called him up and went to him. I knew it didn't have to sell me. I already investigated it all, read the book, so I got a policy right away through him.
Was he local to you?
He was local. He's about an hour drive away. Right. So
I know him.
Yep.
Right. I mean, we're acquaintances. He's been, actually that was prior to the Nelson Nash Institute being formed, right? And so yep. I met him, I don't know how long ago, just attending the Nelson Nash think tanks. So,
yes.
Okay, very good. So he was close. Okay. You drove over there. You didn't have to be sold. You knew what you were doing.
Yes.
Or wanted to do, right?
Yeah.
Cool.
So when I set it up, I went in with additional paid up additions too. I funded it up front, so I could immediately. I think within 2 years, I started taking loans and paying off the outside, bank debt. So and put it all into the policy. So I started.
Yeah. Did you have an opportunity to hear Nelson live?
I did. Yes. So like a year after I bought the policy, the gentleman had him into town, and I went and saw Nelson live. Paul Cleveland was also with him.
Oh yeah.
And it was a great experience to hear him. Wonderful. Just really solidifies your decision and the process and what.
Did you? I often say whenever Nelson spoke to a room full of people, if you were one of those people in the room, you've always felt like he was talking to you.
Yes.
Did you? Was that your experience?
Definitely. And then afterwards, just one-on-one with him, and always had time for people no matter what, and it's a wonderful time.
Right. All right. So now, being an accountant, and then your architect friend gave you the book, and you read through it. You immediately or in short order kind of dismissed it because of premiums. I didn't really feel like I could do that, and your money was in the market and the 401ks. Yes. And you said earlier, you mentioned that all of your savings was in the 401ks. Is
correct? Yes.
Right. And I want to make a distinction because there is a difference between saving and investing. And we're not really taught that. You know what I mean?
Yep. Not the right place to have your savings.
Right.
Your warehouse of wealth, right?
Right. So the market corrects, and you probably had very little control over that unless you're a day trader, unless you're in there watching it and moving your positions around. But then that all of a sudden gets your attention, doesn't it? Whenever
yes,
you
it
lose
does.
money.
Yep. When you start losing.
Yeah.
Yeah. And then just learning the whole fractional banking system and how they want your money in the market and they want you borrowing from them paying interest. It just didn't seem like a good place to be. And I knew I needed to build capital in my own system. And
then you started doing that in 2010, like you said. Then you had the opportunity to see Nelson, and I miss him, and that's an unbelievable experience. I mean, I don't want to overdo it or anything, but, nobody can deliver the infinite banking concept, becoming your own banker like Mr. Nelson Nash himself.
Agreed.
Right.
Yep.
All right. And then, so take us from there. You got to hear him. That rejuvenated you, surely.
Yes.
And you're excited to do what you were doing. You probably felt like you had made a good decision, right? After hearing Nelson.
Yep.
And I know back in the day, too, we're at 2012-ish somewhere, 8 years ago. You didn't have the resources online like you do today. You can
no, not at all. Yeah,
yeah, right. So you can go online today, and I don't know, thousands of queries if you type in Nelson Nash or the infinite banking concept, and it's almost like, in my opinion, my words, not yours, but it's almost like everybody with a life insurance license is an expert and has something to say about the infinite banking concept.
Yeah.
And it just wasn't that way in 2008. You either knew somebody, which was not very often you knew very many people that paid high premium into life insurance, or you had the opportunity to hear Nelson. Mm-hmm. Right? I mean, there wasn't really a lot of other resources out there.
No, not at all.
So
the other thing too, if I step back, my dad, when I was in college, got involved with A.L. Williams, buy term and invest the difference, right? So I think it was Prime America back then. And when I came out of college, he wanted me to he introduced his multi-level marketing, I believe, right? So he sold policies to friends and family, and then ran out of people to sell them to. But he tried to get me to do it. He thought it'd be excellent for me with the accounting background and just out of school. And I'm glad I didn't pursue it, but I didn't feel like I was a good salesman. So I didn't.
Did you buy some term from your father?
I did buy. Well, I didn't buy it from him, but at the time when I did this transition in the whole life, I had term, and I was putting everything in the market just like they recommended. So it's hard to get untrained there, right?
It is very hard, especially at our age. I mean, I'm much older than you. I'm just saying, the older we are, it's like, it's just hard to get noise off of you. It's hard.
Yep.
It's more difficult to unlearn than it is to learn most often. So since you brought up Mr. Williams, who's probably drinking Mai Tais off the Florida Keys, I don't know. But I got a permanent life insurance license in 1991, and it was spurred from, I'd always kind of been interested in like numismatic coins or money, finance in general. Then I was exposed to A.L. Williams, right? Buy term and invest the difference. And, I didn't get licensed or appointed with anybody there, but I went to a couple of their meetings, and man, I bought that hook, line, and sinker. Buy term, right? And invest the difference, and you're going to grow your account so large that you don't need the death benefit. It was a well put together presentation and concept, right? And it's very old too. That idea of buy term and invest the difference is over 100 years old, right? But I say all that to say this, that after in 1991, I went to work with a big Fortune 500 company that was their philosophy. They sold term, and they owned all the life insurance companies that the term was produced from, and promote mutual funds. And back in the day, those were in the era of 8.5% front-end load mutual funds, right? And my personal experience was the markets didn't go one way, right? It didn't always go up, and people actually did outlive their need for a death benefit. Term is guaranteed to run out, right? Anyway, but now I know too that A.L. Williams retired, Prime America bought it, and then what's that bank? Citibank.
Yeah,
Citibank owns them. Yeah, and I got to mention my friend Barry Dyke. He's written 3 books. He's working on his 4th book, and I believe in his first book, The Pirates of Manhattan, or it could be his second book, Pirates of Manhattan, the Highway to Serfdom. Yeah, that one. That's the first one, right?
Yes.
Okay, I think it's in that one where he goes through and he lists from public information and financial disclosures how much life insurance these banks own.
Exactly.
Right?
And they're telling us to buy term.
Right. Citibank owns a tremendous amount of whole life insurance. It's called BOLI, bank-owned life insurance. That's what they're buying, but then they're promoting their consumers, their clients, their customers to buy term. Now, if that doesn't raise your eyebrow there, something's not clicking. Anyway.
All the fees going to Wall Street and to the banks. So when you set up one of these policies and you fund them, and you're building your own warehouse of wealth and an exponential curve when these policies age.
Right. Okay, so that takes us. I'm sorry.
Yep. Okay.
That takes us up somewhere around 2012ish. So what's going on in the Herron household? What's
I bought the policy, and then the sales rep retired. So his name dropped off, and they assigned me to somebody else out in California. I contacted him once and then never heard from him again. So I was kind of left on my own, which was kind of frustrating because I didn't really have a coach, but I got the concept because I read a lot. But I kind of managed through it on my own and picked up the phone, called the insurance company, and did everything I needed to do kind of on my own and learned it. Very easy to do. But it was that was a little frustrating because I contacted other insurance agents, and they always wanted to move me to another policy, and I already invested in this up front, and I didn't want to do that. I knew that there was value to building this up and leaving it alone and keeping the policy.
So you're 2 years or so into the policy, and then your agent retires. So we call that orphaned in the industry, or you become a refugee, right? You're homeless, kind of, but not really. You don't have a coach in essence. But I know personally that you were with and still are with a very reputable life insurance company. So the agent retired, but how's your experience been with the life insurance company?
Oh, it's great. No problems at all. And it was relatively easy to take loans and to work with them directly. I had no problems with that, and setting up monthly payments and all that. I kind of handled it all on my own. So the issue I had was I didn't know how to, should I go in with PUAs and how much and when? That's the kind of coaching I was looking to get, and that wasn't there early on in the
So some
policy.
Of the finer details or nuances of cash flows and policy. All right. Okay, so you were orphaned, and then you're assigned to somebody in California. They didn't really return your call, and so you just kept calling out other agents or advisors.
I called other advisors to see what should I do with this. Do I need to change it or whatever, and never felt comfortable with any of the recommendations.
Okay. And so, go ahead.
So I guess if we want to up to year 10, well, my term rider was coming off.
Okay, but did you do any financing though? Did you do any financing?
I did a lot of financing.
Okay, so you were using it without the coach and getting it done directly with the life insurance company.
Yep.
But you're still really more or less orphaned. You didn't have a coach, and you didn't get, really satisfaction in trying to engage with other agents. And then, so now but you were successfully banking with your policy.
Yes, I was banking, no problems. I took out close to six figures, and I paid back probably half of that. So I've been using it the whole time.
So you're doing it,
right? Yes. Yep. We did anything from putting. We sold our old home. We moved. We moved to a new location, and we had to put windows, floors, hardwood floors. Interior doors. We gutted the bathrooms. Septic tank failed, so we need another $10,000 to put in a new septic system. So that was all. If I didn't have the capital, I wouldn't have been able to do it and make the move to where we're at today.
That's awesome. All right, so let's. So your policy had a 10-year term rider on it, and maybe, just take it from there. You knew that something needed to happen, I guess. Yeah,
I wanted a second policy. So I wanted to convert this term and develop another bank and, grow this system so I could fund the additional system. I heard, I watched your podcast with Paul Cleveland, and he talked about how he got several policies. So I knew what I wanted. And so I went and talked to the agent that I was assigned to out in California, and didn't feel comfortable. One of the things is he wasn't with Nelson Nash. So that's one of my big hang-ups with him. And then, then the other thing I did is I went back to the friend who introduced me to it, and he and went and met with his financial advisor. Okay. But when I met with her, she recommended that this wasn't the right time for me. I should cancel the policy, sure. Get back into term, and then max out my 401k. And
10 years into it, right?
10 years into it, and I'm like, she saw the outstanding loan balance, and she's looking at eliminating all the loans, but the loan, to me, the loans is, I manage it. I'm the banker. I can do whatever I want. I can pay back. I can pay interest only. I can manage that.
Yeah, and
whatever situation I'm in at the time, right? So
if you think about that, Bill, look, a loan is an asset to the bank, right? A deposit to a bank is a liability. right?
Correct.
So,
Yep.
and it's very common for, advisors to look at outstanding loans on policies as just bad debt or debt that needs to be eliminated, because they haven't been trained. I don't care what kind of designation you have in the financial world. You have not been trained in the nuance or the power of dividend-paying whole life insurance and the ability to pay high premium, right, and to have access to that capital. That banking, the idea of banking, becoming your own banker, solving your need for the banking function in your life is not taught anywhere in the financial world. So she's doing, I would assume, it'd be a fair guess, or, she's just doing what she has been trained to do and what she believes is right. The market's always going to go up, buy a term and invest the difference, concept. So, okay.
Yes, she wanted to get me in a high-level convertible term policy. And then I'm like, if I get back into the market and I start doing it the way I didn't want to do 10 years ago, when will I ever be able to convert the term to whole life when all my money's shifting into the market? And I didn't want to go back to lose that capital that I invested in this policy.
So after that hour-and-a-half meeting, you knew that wasn't a good fit, huh?
Yeah, it wasn't right for me. So I still was left searching, and I listened to your podcasts all the time, and others that are out there. But listen to you, and Paul Cleveland was on there talking about creating additional policies. Then your wife was on, Jenna, is that right?
Jana, yes.
Jana, and that kind of convinced me, because you're talking about funding policies and not knowing where the money's coming from, but making it work, and that really was the selling point that I had to pick up the phone and call you, and that's when I reached out to you. I think I had 2 months to convert the term before it expired. It
was a short time period.
So I put you to work, and I appreciate it. You got it done, and I got my second policy.
Well, there's a couple of things there, if I can, and I'm going off of memory on some of it, but did you reach out to other agents or advisors beside the one from your friend?
Yes, I recalled the guy I was assigned to out in California.
Okay,
he's from California. Yes,
and so, and I was just thinking that an advisor or an agent, pretty much after a meeting, or whether there's a go-to meeting.
There's another incident that I reached out to a guy, a local guy. Again, I was trying to look local so I can do some face-to-face.
Right.
But we got Zoom now, so I don't need that.
21st century. Bill, come on.
Right. So,
you accountants, y'all probably even use computers, right? I'm kidding.
Right.
Come on.
Yeah. You just see, I work in Excel all day. So I reached out to this guy, and he totally, you buy from the major four, the top four companies. Big four. They pay better interest.
Yeah.
It was all about interest, and then he wanted to design a policy that was 90-10 split, a premium to paid up additions, and made me really think that I had a bad policy, and that I should do something with it.
That's what stands out in my mind, that unless I'm wrong, correct me if I'm wrong, but you left that meeting feeling like you had made a mistake 10 years prior.
That's
and
right.
That he shredded your policy and, just made you feel bad. That's what resonated with me when I heard you sharing that with me. It just, just like, oh my gosh, some things never change in the financial world. And, you could have had a bad policy.
He made me really feel like I didn't buy an infinite banking concept policy.
Right.
And yet it was growing. It's growing now, that where when I put in a premium, I'm getting double doubled the growth, right, with interest and
more than 2 times the increase in cash value.
That's correct. That's where I'm at now, and it's wonderful. It's great to see.
Right. Well, so if I remember, we did a go-to meeting, or you shared your original or in-force illustration with me, and I just remember I knew the original agent that you engaged with, and my heart goes out because I see it all the time. You were quote unquote orphaned or didn't have a coach, but you were still doing it. And you were doing it, and the policy, the original policy that you purchased was a legitimate policy, and it still is.
Yeah.
And then as we were, talking, it kind of resonated with me that all the financial gurus were telling you to do something different, or telling you that you had made a tragic mistake and you should replace it. And so then, and I remember that you just didn't feel good about your decision, after meeting with them. And, and I think that's just an issue in the industry that's really not going to change. I see it all the time. But when I seen when you shared your illustration with me, whether it was in force or whatever it was, I thought it was a fabulous policy. And we had that conversation where the 10-year term rider was expiring. You wanted to expand your system. You intuitively knew that you wanted to buy another policy, not necessarily replace the one you had, right?
Yep.
And which I completely agreed with, and still do agree with it. And it's not that just because I agree with it, it's right or you should do it. I'm just, we had a meeting of the minds and went through it kind of analytically, with numbers. Let's look at what you really have. Let's look at what you're trying to do, and then what can you do, right? And I must say.
And let me add, when we had that meeting, you were upfront and honest and said, I didn't need a new policy. I could expand my current policy because I had enough room in it to put more PUAs. Right. But I'm thinking long term, and I don't want to have to go through another. When I have the ability to get that new policy, go through another. Testing of the blood and all that kind of stuff. And I wanted to convert now so I can have that second system to build.
Right. And I think that's the best decision to convert the term. But that existing policy, even without the term, you can still, you can pay substantial premium. Yeah. And so now you're in a situation that you can do whatever you want. You can fund them both. You can fund one or the other.
Exactly.
And it is a correct expansion. And I must say, too, that this is life insurance. We have to go through underwriting. Nobody wants to take an exam and give blood and disclose your height and weight and your personal habit. I get all that. And if I can say, you were highly rated. You're a very healthy individual.
Yes. Yep.
When you purchase that policy, right? So you had a very high rating, which a rating is not the end of the world, right? Whether you have a substandard rating, a standard rating, or a preferred rating. However, 10 years later, you might not have been able to achieve that original rating.
That's right. Yep.
And I mean, I'm not an underwriter, but I think you're completely insurable. But the point that I want to make is that we're never any younger or healthier than we are right now. So this idea that I'll, buy policies later, if everything goes well, that's absolutely possible. But not everything goes well all the time. And sometimes we become uninsurable. And sometimes when we become uninsurable, it's immediately. It's immediate, and you don't have the opportunity to prevent it or change it. Anyway, okay. So
and to the other thing too is that I had a need. I definitely needed of more life insurance too.
Yep, you were underinsured like most of us.
I was underinsured, so I needed that second policy, and then now there's a term rider on that. So in 7 to 10 years, I can convert that if I want a third policy. So I kind of knew all along that that's what I should be doing, and so.
Well, perfect.
So
Right. And so you've seen a podcast of ours, and I appreciate you saying that I was up front, because that's the only way I am, just straightforward. Here it is. That's you right. Like it, I love it. You don't like it, I'm okay. Right. But is it just from the podcast? You heard my wife Jenna, and just going through that, where are we going to get the money? Yeah. And that's what triggered you to call.
That triggered me to call. One of the things in your podcast too. I work out of Philadelphia, and you mentioned Philadelphia and cheesesteaks.
Oh yeah,
and all that. So that kind of resonated with me too. And I'm like, I'll give him a call and see what he says about this policy. Let you take a look at it, and then see if I can work with you.
Perfect. And so we did. We came to an agreement. Yep. That this is. You have two ways to move forward. Either one is okay or good, and what's the best? And I think that you're in a position where you have the best of both worlds. You've got a policy that has 10 years. I don't want to, I say maturity, but a policy really doesn't mature until you're age 120 years of age. Then it matures, right? Mm-hmm. But the longer these things are in existence, the more efficient they become. Yeah. So you had a very efficient policy. It was well constructed. They maybe could have used a 20-year term right or whatever. Hindsight's 20/20. But you were with a legitimate, solid company, probably one of the best companies in North America to practice the infinite banking concept with, my opinion, right? And I am an agent for that company. But I'm married to my wife, Jenna. I'm not married to these life insurance companies. If the best solution for you would have been to replace and move, I would have said that, and why, right? It just so happens that because, I'm appointed with that company that we could also... I could become the agent, the servicing agent on your previous policy, right? So, not that I'm looking for work, but, it gives us the opportunity to have a whole kind of a clear picture, you know what I mean? Not just piecemeal trying to put together a solution for you and your family. So, okay, so how's it been? So this is October, so maybe we've known each other for 6 months or so. Yeah. Something like that. Has things gone as you've expected, or? One of the things since I'm an accountant and I like spreadsheets, I go to the insurance website and I look at my numbers. Every day? Come on.
Every day.
They're moving slow as molasses.
Yes, they are. But it's like great to see. You never lose. You never lose. It's gaining every day. So it's just and to see that the cash value just growing every day, and you're doing the right thing.
Yeah. Right. So and I got to say too, and I had mentioned it before. But you sent me, thank you, without asking, you're very nice, and you sent me a copy of Nelson's fifth printing, first edition of his book, Becoming Your Own Banker. And let me just share with you that's like a real treasure. I've been looking for one of those for 16 years. Yeah. So thank you very much for sending
you're welcome.
I was
glad to do that. Yep.
Okay, so what else? That takes us up kind of to current. And just keep sharing with us.
Well, the other thing with this is the generational effect of learning this. So I don't see this I'm not going to get rich off of it, but the generational impact to my grandkids as I teach my sons and daughters this. My son turns 18 in May, and we'll be reaching out to you to get him a policy. He's excited. He read Nelson's book already. I'm training him to this is the way to go, and then that next generation of building this wealth and this concept is very powerful. So I'm looking forward to getting him going with his policy.
Perfect. We're here and excited to help him when he's ready. So and you're still financing things. What are you currently doing with your policies?
This will be good for people to hear. With COVID, and lockdown. April, I took a 15% pay cut.
Ooh.
And and now they've restored that in November this month. So, but it was 6 months of, so when these things happen in life, you can put the payment on hold. So
yeah, that's right in the middle of, that's right whenever we're converting, right?
Correct.
Right.
Yes.
Yeah. Okay.
Yep,
right.
Happened right after we converted, and I put all that money in the policy, and they cut my salary for 6 months.
Oh my goodness.
But there's some worry. There's some worry there, right? So I looked into forbearance, right? And then I'm like, I'm not doing forbearance because they want it paid they're not tacking on the back end. They want it paid the month is due, right? After 3 months of forbearance. But I really didn't have to worry about a thing. I had plenty of capital in both policies, and I survived it. I haven't even took any money out of the policies yet, so I worked it out. And now but it was there, right? So I did put the payment on hold, and I'm paying interest only right now.
On your loan. So you had some outstanding loans.
Yes. Yep.
And so, okay, the conversion, COVID hits, they're locked down, 15% pay cut. And I'm sure when they reinstate the 15%, Bill, I'm sure they're going to give you all this back pay, right?
No, not at all. We keep asking. They keep saying no.
Right. So, you didn't have to borrow money against your policies because of COVID. You just reduced your loan repayment.
Yes.
On loans that you previously had outstanding.
Yes.
Right. Mm-hmm. And then the premium, you kept the premium the same, or did you adjust the premium?
The premiums I pay on an annual basis. So I keep, I'll come up with the money somehow to pay this year's annual premium. Mm-hmm. And so I didn't have to worry about any because I had the policies to fall back on.
That's pretty powerful when things go less than expected, and you can't really control it. We didn't have control over COVID. Okay,
no,
people had control over COVID, in my opinion. But when things happen and we can't control them, it's never a problem. It's never a bad thing to have access to capital, your capital, is it?
That's correct. Yeah.
Have you ever had too much access to too much capital?
Yeah.
No, it's ridiculous just saying it. So.
Yeah. And so I'm kind of in the process. I want to eliminate the banks, right? I still got the banks, right? And then from there, take these policies and invest, into things that can grow cash flow and that thing. So I want to take it to the next level eventually, once I eliminate the banks.
Do you have a timeline on that? Do you have an idea of when?
I don't, but hopefully in a year or two.
Nelson used to say it would take the average bear, 14 years to get rid of the snakes and dragons.
Yeah.
So you still have hope.
I might
still got a few years.
I might be about there 14 years into this before I can do it. Yeah.
Yeah. And so your son's going to be ready next year, and he's 18, did you say?
Yes.
18. Mm-hmm. So then you're going to, which I think is correct what you've done, the expansion you started where you were, and you experienced things that were not in your control. And if you have second doubts and you want to go get, opinions or confirmation from the, typical financial world, it's probably not going to go your way, but you kept reading, and you're an accountant and the spreadsheets, you did it anyway, right? Mm-hmm. And then, from a different perspective, a different agent, having that conversation, it was very powerful for me, your whole experience. It's like, because, and I say that because, we all need reassurance. Mm-hmm. If you're the only one out there, Nelson talks about the Lone Ranger in his book, and, when we did live events back in the day, we used to give away the Lone Ranger Award, because you can almost count on your one hand, right? How many people do you know that's paying high premium in life insurance?
Yeah.
And they're just not very many. So it's easy to feel like the Lone Ranger out there,
mm-hmm.
But you were doing it anyway, and my hat's off to you for that. And I'm just saying that you've expanded correctly, in my opinion. And then the expansion continues, to your children and that generation. And the result of that, ultimately, when there are policies on your children, they're going to grow up and meet somebody, and they're going to fall in love and want to start their own family. And then now you're looking at a third generation, which you may or may not get to experience the ultimate result for them. That's pretty powerful.
Very powerful. Yeah.
And then, because we're all human, we have this finite thinking or finite mindset. We want to see numbers on a page. We want to be able to see the outcome. And the future is unknown.
Yeah.
So you may or may not get to see the outcome. Right. But I'm convinced if the correct foundation is laid and you start on the journey and then you continue to make minor adjustments on this journey, you're going to wind up where you want to go.
Yeah.
And I think that,
Agreed.
You're a legitimate case of what that looks like,
Yeah.
So.
Yeah. And thinking long term and generations is the key,
Right.
That the conventional financial wisdom is just not there, right? There's no long-term financial outlook when you follow the path of Wall Street and what's recommended there. So
it's sure unknown, and it's weighted in somebody else's favor, not yours.
You got the market right now. Wall Street's COVID is destroying Main Street, but Wall Street's through the roof. It's all fake. It's got to eventually come down, I would think so.
Yeah, I think the bankers, Wall Street, they're going to use the excuse of COVID forever. It's going to go down in the history books. Yeah. This is all due to COVID, right? And
they're hiding behind the collapse of the bankruptcy of America, I think, as they use COVID as the excuse.
Yeah, and using COVID as anyway, what's going on around the world. I think Britain just yesterday were coming up with universal income, 80% of your salary.
Oh, yeah. Yep.
6-month moratorium on mortgages, trying to do away with printed money. And it's like, Brexit, when's the last time we've heard about Brexit? Brexit who?
Yeah,
Yeah, how convenient. Then Australia. I talked to a client.
Lockdown there, Australia and New Zealand, it's horrible what they're doing over there. So
yeah, I talked to a client yesterday in Argentina, and he's been down there, I don't know, 6 or 7 months, and it's like he said the last digit on your visa, if you're a foreigner, or your ID if you're a citizen, that dictates what days you can go out of your home. You can get out of your home 3 times a week. If you have an odd number, it's, Monday, Wednesday, and Friday. If you have an even number, it's Tuesday, Thursday, and Saturday. You can leave your house 3 times a week. Think about that. Anyway.
Yeah.
And if we think that we're immune to that in America,
it's looking close. Like we're going to be there. So
spooky.
Yeah.
All right. Well, what else, Bill, do you want to share with us while we're here?
I think we covered it all. It's a very good conversation. Appreciate it.
Yeah, we're about 52 minutes in, so things are going about like you expected, better than, less than. Are you okay? You happy?
Happy. Things are going great, and here's another thing. The next thing that's up on my for using the policy is that I got a lease that's expiring. Vehicle that I leased. It's expiring in. It comes due January 1st, so I'll be buying it out because I like to keep my vehicles for 15 years. And so at the time when I purchased the vehicle, I was still dealing with the banks. Didn't have enough in my policy at the time to buy it outright. So we chose the lease route with the intent of buying out the lease in 3 years. So we're at that point now. So I'll be buying out the lease on our vehicle.
And so you'll finance that with policies and
finance it through the policy, and then do monthly payments.
Look at you doing 15 years on your cars. I try to get 10 out of mine. I think I'm kind of a fat hog. So I got an opportunity to, expand my thinking and drive them for 15 years. I love that. And interest rates are low. Well, go ahead. Yeah.
I had one where the engine, $250K on it, and the engine went, and I tried to fire it up after work, get home, and antifreeze was coming out the muffler. So I knew it was time to get a new one.
You don't even have to.
The dealership. I just toted it to the dealership and went in and bought my next vehicle.
You don't even have to be a mechanic to know something's wrong with that, huh?
Yeah, that's right.
Here we are in the lowest interest rate environment ever. I think that last car, and we talked about it, I think Jen and I talked about it on the episode that you mentioned earlier. The last car we financed was, we did a partial finance. I used some third-party lenders' money at like 2.8 or 2.9, something like that. But we paid a healthy amount down and financed a down payment, right? Mm-hmm. And some of my friends and clients and colleagues are like, well, James, if you're going to pay the life insurance company 5% and the third-party lender was loaning you money at 2.8, why didn't you use all of their money? And they appreciated the fact that, we financed a pretty large down payment with a policy, but they're like, well, you should have just financed the whole thing. What gives? Yeah. And, at the end of the day, we're all human, right? I can do what I want to do. The banker can do what he wants to do. The golden rule. He who has the gold makes the rules, right?
Yeah, that's right.
And so I took, I don't know if I've shared this, live or, in the big wide world, but at the end of the day, what we did and why we did what we did, I asked, and my wife drives nice cars, right? I drive the truck, still drive that 2010 Dodge, and it's out on the big wide world on how that was financed. But how we got to the point to finance some, all, or how on the last purchase is I asked my lovely wife, I'm like, Jana, what would you like your payments to be? I felt like a car salesman, Well, Miss Neathery, what would you like your payment to be? And that's what was determined. She runs a household budget. She writes all the checks. And so I put enough down where the payments came out. We have a loan repayment to the life insurance company and an automobile payment. So, and at the end of the day, I'm just sharing, the bottom line is the banker gets to do what they want to do.
That's right. Yeah.
And so if I want to use
very powerful.
It is very powerful. It's a complete different mindset, When you walk in, I don't care what you're buying, automobiles, remodeling your home. Whenever you have control over the banking function in your life, it's just a different attitude. And sometimes that leads to different decisions that are good for us. Anyway.
That's right. The other thing too is an experience that I had where when we were moving, we needed a down payment on the lot because we were building brand new our home, and we were buying brand new, and I used at the same time when we were working through this, I had a small pension from a previous employer that were buying out the pension. So I got it's less than 10 grand, right, from them. And instead of rolling it into an IRA, I just rolled it right into the lot payment. Ah. But what I wish I did is put it into the policy, got the PUAs, right, and then borrowed it from the insurance policy. Yeah. So there are things you learn that you can do with these things that will increase your warehouse of wealth, right? And I wish I would have done it that way.
Yeah, in hindsight, it's always going to be 20/20, no question about that.
Yeah.
But when we know better, we can do better, right? If we don't know, we don't know.
Exactly.
So, and that's really my why I get out of bed every day is just advancing the idea that you can become your own banker. You have the opportunity to vet this idea, becoming your own banker, the infinite banking concept, to see if it's, is good or could be good for you and your family. And, Nelson used to say, and I completely agree, that this is caught more than taught.
Yes.
So for an accountant, and of course, I understand your friend, another professional, brought the idea to you originally, but, a lot of accountants, and I'm not picking on accountants. You could be a physician, you can be an attorney, you could be whatever. I mean, but it's hard sometimes for accountants to get
exactly. I know.
I mean, when you go for your CPEs, do you talk about what you do, or with all the other accountants, do y'all sit around and talk about what y'all do with money?
Yeah.
No, you don't.
Well, I didn't get my CPA, so I'm not in that. I went into the corporation and world, and I'm doing budgets and forecasting with my degree. So,
well, that's legitimate. So, do you remember? Oh my God, EVA, Economic Value Added, Stern Stewart.
Yep.
And becoming your own banker. When you read that, did that resonate with you?
Oh, I didn't read it, but I heard of it. I heard of the book. Yeah.
All right. Well, it's Coca-Cola,
Yeah, Coca-Cola used it, right?
Yeah, absolutely.
Yeah. Yep.
And it's like, your capital has a cost, whether you recognize it or not. And most people don't recognize the cost of their capital. Therefore, they don't value it properly. Therefore, it skews the way they look at money and cash flows with, a minor adjustment. Wait a minute, your capital has value. And as a matter of fact, your capital should be more valuable than the third-party lender's capital.
That's correct, yeah.
That didn't exist until you completed a loan request. Now, if you think about that, most credit cards are ticking along between 10 and 25% interest. And then people will pay that all day long and not think twice about the value of their own capital.
Yeah.
I mean, that's mind-boggling.
It is, yep.
Anyway. All right, Bill, what else? We probably need to wrap this up.
That's all I have. So, very good. Good talking.
Yep. I had fun. You did a good job, and I think that people will find value. And if for some reason they don't, they'll just scroll right on by and find something else.
Something else to listen to.
All right, Bill, thank you for sharing with us. I greatly appreciate it.
Yes, thank you.
You're welcome. All right, have a great
good
day.
day. Thanks. Bye-bye.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.